Seneca Village, one of the things we pride ourselves on is ultimately assessing deals and opportunities as if we were the developer ourselves. What that does is allows us to give access to capital to underserved borrowers, markets that have just been overlooked for a very long time.
What we're doing here at Seneca Village is really trying to optimize and create the most value for everyone involved so that the lenders, the borrowers, the developers, the investors, and the community all equally benefit.
My name is Aiden Sorrell. I'm co-founder of Seneca Village, and I'm a lifer in the real estate business. I come from a real estate family that has humble beginnings. They started in 1925 as immigrants from Guyana and established a real estate company here in New York. We're full service. We own and operate. We manage. We broker both residential and commercial, and we develop property. I've been doing this for 20 years, and I've leveraged that experience and brought it to Seneca Village.
I am Brent Boyce. I'm co-founder of Seneca Village. My entire life has been focused around assessing risk and identifying opportunities in some way, shape, or form. Professionally, you hear about the fact that I have a Wharton MBA with a concentration in real estate, finance, and entrepreneurship. Professionally, I have worked in financial services with 15 plus years in debt capital markets. I've worked for blue chip firms like Goldman Sachs, Ernst & Young, MR Beal and Company, SunTrust, and Bank of Montreal. At every firm, my roles have been around assessing and mitigating risks. Personally, I use these same skills to assess risk in real estate developments and over the last 10 years, built a real estate portfolio which I own and operate on my own.
I think what's so cool, what's so unique is we've literally grown up together. We come from the same neighborhood, Harlem, New York. Our mamas did business together. They helped raise us. They helped us teach us, what they knew. They helped create and establish a second generation of families that work together, break bread together, and looking forward to the third.
Yeah, it's awesome. Aiden's truly a friend, business partner, business stuff aside, and it's rare that you get to work with a friend. It's even rarer that you get to make that money with a friend. We've done that successfully for 20 plus years. We've tried it with other people with some success, but here we are finding ourselves again with a management team that works for both of us and has a successful track record to boot. The investment philosophy is the win-win-win scenario where I think Aiden coined the phrase great. We're creating value in a community using community dollars and making sure that the stakeholders in that community are the ones benefiting from it. Right now we're focused mostly in real estate development, so fix and flip, ground up builds, but most importantly we're identifying these opportunities with people who are there locally, people who've been overlooked and traditionally haven't been able to get the financing that we're providing them. Because of that, and because real estate by its nature is a local knowledge business, we're able to cherry pick some of the best deals when we look at them from our underwriting and put them through our underwriting criteria.
Our target audience is ultimately borrowers who can do a project, repay the loan, and do it again. We're in the relationship business. We want somebody who's going to want to look at us as a capital partner for their whole career. Right now, we have a borrower that we've been working with for 2 years that's done 17 loans, and that's the ideal borrower.
Yeah.
Somebody that we trust, somebody that trusts us, and there's a partnership that we're going to take to the future.
I think we tried private money, gold mine or something,
yeah.
Gold mine, private money, something like that.
It was a website that we signed up for hard money lenders. And Brent called us one day. And that was the start of this relationship.
And it's pretty easy, straightforward. We work together, you got issues, he's got our back, we got his back,
It's a partnership.
Yeah.
Really, truly. It feels like a partnership. It's a lot of conversations. He helps us. He not only financially backs Flipping One, but we have, if I have a question about what's a smart move for Flipping One, he's the first person we pick up the phone and call. Should we move this? Should we invest in this? What are your thoughts on the numbers on this? He gives us a lot of advice, and I mean, it literally, it feels like a partnership.
That's a great example of what we're doing here. So we've partnered with a borrower. We've helped them take many projects to the finish line.
Yeah.
We've built a relationship with them and a partnership with them where now we've actually invested alongside them as equity investors with them. And now ultimately they're investors in our fund, making passive income out in addition to what they're doing. And all the while still borrowing from us, still providing equity transactions for us, creating value for both us, our investors themselves, and the community that they live in.
We look at projects as if we were the developer ourselves. Our primary focus is this a project that will be successful? Can we do it ourselves? Can we see it to the finish line? If we think that is to be true, then we believe in the borrower that they can do the same. We focus in markets that make sense. So that's starting in our home market of New York. We do New Jersey, Pennsylvania, the Carolinas, Florida, California, Illinois, and we're growing. We recognize that there's a lot of marketplaces, and when they make sense to us, they make sense to our borrowers too.
Well, at the end of the day, investors care about risk-adjusted returns. What they're getting is an ability to get outside returns, mainly because of our underwriting criteria, both traditional and non-traditional, where we have been able to pick winners. What they're getting is, let's say, industry average last year was 7 to 8%. Last year we did 3x that.
Ultimately, investors are getting good value on their money. I mean, we recognize what business we're in. We're here to perform and give a good return to our partners. Our business partners are our investors. The way we do that is by using our own underwriting criteria that we handpick that allows for good reward for the money that we lend.
What investors are getting is access to investment opportunities that they traditionally wouldn't get with other lending platforms. This is a relationship business. We have nurtured and built relationships in these communities that allow us to invest where others won't and allow us to make returns better than others can provide. What our investors should expect is high risk-adjusted returns. We have partners, and there's capital partners and there's local partnerships. And what our partners should expect is that we're creating wealth. And we're doing it in a way that creates a bigger pie for all of those involved, all the stakeholders, those in the community, those investing dollars, those doing the development. We're creating a win-win-win scenario. What we've challenged ourselves to do is to create a platform, a vehicle, an investment tool for not just ourselves, but for others that might not have the access to the deals or the access to capital, so that we can actually create even more value than what we would be able to create on our own. We've challenged ourselves to do what we've done individually en masse and at a much larger scale.
We have ambition. Seneca Village is going to be a portfolio of funds. We're going to represent debt capital markets, equity markets, and investments that we think make sense. We're going to duplicate our track record in debt lending and span a much larger profile, all while providing equity and value to ourselves and our partners.